and welcome to Sectors UpClose. I'm Angeline Ong. Our focus today is on the tech sector, and my guest is Bob Jenkins, the global head of LIPA research at Refinitiv. Now, nothing quite represents the tech sector as the Nasdaq. Although the main composite index also includes the likes of American Airlines and Starbucks, it is heavily weighted in favor of the biggest names in global technology, from Apple to PayPal. In fact, 50% of the Nasdaq's market cap of $24 trillion is made up of these 10 companies. But with the US economy recovering at speed, investors have been focused on whether now is the time to move away from these relatively expensive growth stocks into economy-linked sectors such as banks. That sparked a short-lived sell-off in March, only to then rebound back for a gain of 10% this year, so not that far behind the wider S&P 500. So what should investors make of the sector? Let's ask Refinitiv's Bob Jenkins. Bob, thank you so much for joining us. To borrow a question from your own notes, is it finally time to for tech to take a back seat?
You know, Angeline, tech has really enjoyed a nice run over the past decade. And it's partly deserved. These are large, successful companies serving important functions. And there's also been a kind of effect from all that trend towards passive investing in the indexes you just mentioned. So as people move into passive products, that basically just moves money into these large tech names. So the money's kind of coming in from all sides. But by the fall of 2019, pre-pandemic, there were many market pundits claiming that it may be time for tech to take a back seat. And then along came the global pandemic and the work from home trade and such. And tech, as you mentioned, really led the market back from that March plummet. And you add to that kind of the emergence of these stay-at-home retail traders using video game-like mobile trading platforms that fueled a very strong risk-on mentality, and that just served to raise tech up even more. However, towards the latter part of last year, the tide did begin to shift, and value started to lead tech for the first time starting in Q4. And really, yes, so far this year in 2021, it's about double the return from the value sector over tech and growth stocks. And tech is actually trailing things like energy, financials, and industrial sectors it's never trailed in many, many years. But will that be a new long-term trend? Tough to say. Tech is still considered overvalued over its longer-term valuations. You have rising rates out there. That puts a lot of pressure on highly valued securities. But at the end of the day, the fact is the demand for tech is still strong.
So, Bob, everything that you said also feeds into the thing that you mentioned in your notes about the new normal and irrational behavior. How does it affect the longer-term outlook for this sector?
Obviously time will tell, of course, but what we're seeing and what we saw particularly over the pandemic was these stay-at-home workers and even unemployed folks finding themselves spending a lot of time in front of their computers. And a lot of them also were missing kind of traditional gambling outlets like sports betting and even casinos. So they discovered this online trading via mobile apps and these kind of retail-friendly discount brokers. And these apps themselves played like video games, and they attracted these new traders who some were using stimulus checks and such. And they were getting very deeply and oftentimes even free trading commissions. And they're taking advantage of the convenience of fractional shares. So even for a few $100s, which a lot of them were starting their accounts with, you could buy pricey stocks like Tesla. So you got this kind of whole new breed of online trader, and they're further fueled by these chat rooms where they kind of develop a herd-like trading mentality, and they all pile into thinly traded stocks, and they're finding that they could actually manipulate the prices of these stocks by trading kind of in unison. And so you have this combination of like a feeling of empowerment with these retail traders, proving really intoxicating and resilient. And even though some have taken losses, these stocks are still high. But when you think about this embrace of risk that they've all kind of are enjoying right now, buying what many would consider perhaps overvalued tech names like the FANG stocks actually seems like a relatively safe and stable bet. And couple that up with the fact that now institutional, or the quote unquote smart money, is seeing what's going on. They're playing it, so it's kind of feeding into itself, and it's creating what I call like that new normal of collective irrational behavior, and it's putting it on an even firmer footing.
So let's take all that and look at it from an ETF point of view. How should investors approach the space from that angle?
Well, first of all, when you think about ETFs, obviously a lot of them are what we just talked about. They have a lot of indexes, products, and there are also a lot of, what we call smart beta products as well. You see the presence of tech names in a lot of them. So you got to be wary about that. Just being a passive investor means that you have a lot of exposure to a lot of these highly valued names. So you're going to be a part of it no matter what. And in general, what we need to think about when we think about kind of what's going on with all the factors and the pricing of tech, this is kind of a movie we've seen before, right? We've seen in the late 90s a lot of retail traders coming in, congregating in chat rooms, tuning into market pundits on TV, embracing the risk of overvalued stocks. And we saw the way that movie ended in early 2000. Is it different now? And one would argue maybe it is, because the economy is in a different place. There's kind of a new growth cycle starting instead of being at the tail end of one. So, again, if you're an investor, keep that in mind, that there could be some potentially rocky roads with ETFs. But again, you could choose maybe perhaps non-passive active ETF products that are perhaps differentiating what they hold, or you could look, of course, to value-oriented products. But in general, I warn investors, particularly those who are getting into the retail trading, be aware of the pricey securities in these meme stocks. Only invest what you can afford to lose. And I caution against the use of leverage. That we've seen that movie before too. So view it what it is. Some of these stocks and some of these products are a little bit of a roll of the dice.
Really interesting stuff there in a changing landscape. Thank you very much. That was Bob Jenkins, the global head of Lipper Research at Refinitiv. Before I go, here are some of the top stories in the sector. Tesla edged past Wall Street estimates for first quarter revenue, boosted by sales of environmental credits to other automakers, as well as from selling some of its Bitcoin. Tesla posted record deliveries in the quarter despite a global chip shortage that has hit rivals hard. Tesla has posted profits for 7 straight quarters, most of them driven by those environmental credits. Now, Apple has started to roll out an update of its iOS operating system with new privacy controls designed to limit digital advertisers from tracking iPhone users. Facebook and other companies that have iPhone apps say the change will hurt small businesses and their access to target customers with advertising. Apple has stood firm on its decision, prioritizing its customers' control over whether data collected by them is shared with third parties. Industry experts say the change will hit the $100 billion mobile advertising market hard, with some mobile analysts believing fewer than 1 in 3 are likely to grant permission. And finally, China has launched a robot prototype capable of catching space debris using a net. State media said the Neo-1 was launched on a Long March 6 rocket alongside a handful of satellites. The 30-kilogram robot was developed by a Shenzhen-based asteroid mining startup called Origin Space. The Neo-1 will use a net to capture debris, then burn it with its electric propulsion system. And that's your roundup of the tech sector. I'm Angeline Ong, and this is Reuters.